Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. A bumpy start to the new year. Well, volatility has returned to the financial markets here in 2025 as investors are trying to digest the implications for transition in Washington, among other things. Now, the stock market has experienced some big moves in both directions as schizophrenic inflation data and interest rate volatility are creating uncertainty around the path forward for the Federal Reserve. Just a couple months ago, markets were expecting at least another full percentage point cut in the Fed funds rate. Now, however, it appears unclear as to whether or not we'll see any cuts in 25. That's been putting upward pressure on longer-term rates. We've seen the 10-year Treasury go from 4% to 4.75% in just the past 3 months. And stocks don't typically like higher rates, especially when they move higher that quickly. So it's no wonder the S&P 500 fell close to 5% from its early December peak through the end of last week. It's now trading right around the same level as Election Day. Now, there are certainly some positive signals coming from the economy, but stocks are expensive. Interest rates, therefore, will likely continue to be the tail that wags the dog. Keep a close eye on that 10-year rate because a move above 5% would likely result in even more stock market volatility ahead. For this week's featured insight, your allocation is key. Many investors focus more on the details when it comes to their investments than they do the big picture. There's a lot of focus on individual stocks or sectors, and while that certainly can be fun, and it's not unimportant, the biggest driver of returns by far is the overall asset allocation between stocks, bonds, and cash. In fact, the percentage of stocks versus bonds in your portfolio is likely to be responsible for more than 90% of your return profile. Security selection, that is, stock picking, is much less influential. Now, that assumes, of course, you have a diversified portfolio. Therefore, it's important you get your asset allocation decision right. Should 40% of your portfolio be in stocks, or should it be 80%? It's a different answer for everyone, but it's the one that you should be focusing on the most. Looking ahead, 2025 market outlook. Well, earnings season kicked off this week, so we'll get to see how well the holiday economy performed, but more importantly, we'll get some guidance on how corporate managers see 2025 shaping up. Earnings growth is already expected to be very strong this year, and stocks are already quite expensive, with the S&P 500 trading at 22 times the earnings output that's expected this year. International equities, however, are more than 30% cheaper, so there could be opportunity to look outside the United States. It's been a while since international stocks outperformed, and sentiment toward that group is about as negative as it can get. So that could be a contrarian sign that international equities are ready to perform. Smaller companies are also far more attractively valued relative to large ones. If the economy continues to see strong growth this year, you're likely to get more bang for your buck in the small caps. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.